How about the carry trade? Bearish on the yen, in other words, USD yen going higher, essentially. Oh, bullish on the yen, in other words, yen dropping, right? In other words, yen strength. I happen to agree with that, Mark. Yeah, I think this is down. I think this is down. I happen to believe this is up. But that's, like, I don't want to impress my personal opinion on you. Pound. Depends on the level, really. It's a range. Yeah, so my point being here is this. I see so many people dying by virtue of 1,000 cuts. What I'm trying to say is that maybe approaching it from a different standpoint is smart. And maybe this is the way to do it. I think the Swissies, basically the inverse of the euro. The thing about the Swiss franc and the euro dollar is this, guys, is that they've become funding currencies. That's very evident to me. They're so sensitive. I wish I could overlay the euro with the S&P 500. If the S&P is going up, the euro tends to lose some strength. If the S&P is going down, the euro tends to gain some strength. And obviously the inverse for the Swissy, the trend's been bucked a little bit lately because of the severe dollar weakness that happened right at FOMC. But to me, I don't really want to get short the euro. I don't really want to get short the euro with the stock market looking like it wants to drop necessarily. I'd like to short the euro once I see equities approaching something that looks like a bottom, just because of the way the correlation's shaped up, if that makes sense. Somebody said being short the S&Ps and long the commodity stuff, those trades are offsetting. Because the S&P going up is really a lot like getting long commodities, it seems, from a correlation standpoint. So you can't, you're going to really hedge yourself a lot by taking both sides of that, if that makes sense. So for me, I got out of a lot of Aussie stuff and into a lot of S&P shorts because I can't have now still trying to pick up Aussie stuff where it makes sense, but it doesn't make sense to me having both sides of that at the moment. All right. So my point with this is as follows. If you were trading this bundle here, somebody says, I want emerging market exposure, and you're the currency analyst. Okay. How would you approach this? Go to say this euro or Aussie. And those of you that were, bearish, where's your sort of range? And those of you that are bullish, sort of range? It's 1,000 pips, 1,200 pips. Yeah, I don't disagree with you. We just talk about currencies for argument's sake, Alexander, but I don't disagree with you, yes. All right. My point with this, though, guys, is if you are going to be short, that's your zone to be short. And if you're going to be long, here's your zone to be long. All right. And I've said this before, maybe this helps you in the way you approach stuff. And you go, I don't know, long, 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 long. Short, short, short. In between, dead. Do you guys know anything about the yellow-bellied sea snake? It's from the cobra family, grows to about 1 meter and change, lives in the Pacific. All right, 10 times more venomous than a cobra. I mean, this sucker is properly venomous, and he needs to be. He can only stand in water for a few minutes, and it's pretty useless on land. but it's adapted to living in the water pretty much. And the way it hunts is as follows. It cannot swim around underneath the surface and chomp fish. And that's all it feeds on. So what it does is it goes up to the top, and it's air breathing, obviously. It goes up to the surface, and the little fish are drawn to debris on the surface as sort of sun protection and protection for themselves. So they go up there, and the fish just float on top of the water. Or the snake does. And then the little fishies come along and use the snake as refuge, thinking that it's sort of garbage on top of the water. And the snake can strike up to a meter in half a second. And then what it does is it zaps the fish that has taken refuge underneath its stomach. And it's an insidious thing, and forgive me if you're offended by this nature story. But then what happens is that the fish dies very, very quickly because of the potency of the venom, and the snake can eat it. And this is how it hunts. So my point being is this. If you are trading excessively in between support and resistance zones, you probably the fish trying to swim around catching fish. But by waiting for these major turning point areas, you are playing this sort of insidious sniper role where you're just waiting and waiting and waiting. Alright, so if you are dying from a million cuts in the market, don't be afraid to wait. And pick major turning zones. Then take 4 or 5, 6 trades in that turning zone, and then do some more waiting. Alright, so that's today's lesson on patience, bias, understanding. And think to yourself, if I was a portfolio manager, how would I be doing this? I'm not talking about direction. I don't care if this is a fallacy, by the way. The big boys are doing X. The big boys know more than Y. That's not, in my mind, whatever. Who cares if they do, who cares if they don't? This is the hand that we dealt. It's nonsense. They're just people like you and I. So they have more money. Right, they can put on a bigger trade, but they are people like you and I, so their opinions carry just as much weight in terms of the significance of their decisions. Right? Because your $1,000 and their million are equally significant to you relative to your lifestyle.